All right, welcome everybody. Today we have a very special training for you guys. We're doing a little something different today. We're not going to talk about tactical e-commerce, Amazon selling today, but at the same time, we have a super important topic I think that's relevant for a lot of you guys. And today we're going to give you an overview of a very little known tax credit that applies to you if you're a US seller, if you're a 1099. We'll walk you through the details. We're going to give you an overview of the sick leave and family leave tax credit. Okay, so this applies to you if you're a US based Amazon seller, and we'll share some more details. So today I'm very excited, and I'd like to quickly introduce our guest presenters. We have Chris Hearn, who is the president of Community Bank Shares and partner at Lendesca. Welcome, Chris. How's it going?
Thanks for having me, Gary.
Excellent. Welcome. And also, I'd like to welcome Matt Craig. He's also partner at Lendesca and chief marketing officer at Community Bank Shares. And welcome, Matt.
Yeah, thank you, Gary.
Excellent. Excellent. All right. And I see we have a number of people joining us live. Because we are live, if you can please type your name and where you're joining us from, just so we know where everyone is, that would be great. So before we get started, I'd like to ask Chris and Matt, who is this training for today and why is it so important?
Yeah, so honestly, this training is for anyone that is self-employed, has worked as a 1099, 1099 or freelancer, someone that has, deems themselves self-employed, which obviously most Amazon sellers, I come from a background of e-commerce and Amazon selling, so I understand that world quite a bit. So anyone that has dabbled in anything that is self-employment and has claimed self-employment income on their taxes, this is really for that audience. So if you have filed a Schedule C or have SE income on your tax returns, then this message is directly for you.
Actually, and also Schedule F, ironically. But yeah,
Yeah,
I don't think
true,
we have
true. Yeah,
farmers on this call, but yeah,
yeah.
they qualify as well. Anybody who's a sole
Yeah.
prop or
Not
1099
too many
filer.
farmers doing Amazon selling, but I'm sure they're out there.
Hey,
Sure they
there
are.
could be some
It could
people
happen.
running side hustles, man.
That's right.
Don't
That's right.
underestimate our audience, our community. So
Yeah, yeah.
yeah. No, this is great. And I recently, I was connected to Chris by a trusted business advisor of ours. And this is something that I was not aware of. And I think this is, an opportunity to get your money back from the U.S. government. I mean, and rightfully so, because obviously, the IRS, they're not doing the best job, like they should of promoting this to make sure, like they could potentially owe you some, back taxes, right? So I just don't want you guys to leave your hard-earned money on the table. I know you guys, everyone's hustling, everyone's like overworked, and it was a really tough struggle through the pandemic for everybody, myself included, right? So there's an opportunity for you guys to get some money back, and there's a pretty tight deadline. And Chris and Matt, they're going to walk you through this in just a few minutes. So I just want to make sure that this is on everyone's radar. We're already halfway through February, tax season's coming up, and everyone's busy running their business, right? So really, I want you guys to please pay attention, put your phones down if you're, or, if you're like doing something else, because I think you will get some value out of this. And at the end, we'll also share a way that you can, fast track this if you are interested. All right. So everything looks and sounds great, guys. So without further ado, Matt, would you like to start your screen, share your screen and get
Yeah,
the show
yeah,
started?
sure.
And also, in case you have any questions, guys, please type them in the chat first, and then we'll get to them at the end, if that sounds good. All right.
Right. While Matt's setting that up, I'll just follow up on what you said there, Gary, which is this is a little unusual for us to be talking about this tax credit program because neither Matt nor I knew about it about 8 months ago. It is ridiculously unknown, underutilized, and it is one of the last pandemic era programs that still exists out there. And the reason it's applicable to folks that fall in those categories we just mentioned a few minutes ago is because most of you, if you fall in those categories, did not get a check from the Treasury unless you were a W-2 employee. And so, as Gary said, this is what you are entitled to. It's actually considered an IRS entitlement, and most people don't know anything about it. And frankly, you're as deserving as this as anybody else was who just happened to get a W-2 back during that time period. So that's why we're trying to get this out. We're trying to educate people. Our background is normally doing small business lending. So because that's who we normally finance, this is something that's completely applicable to our small business audience. And we just want to make sure we get it out there and try to, get some of you some of the funds that you're definitely entitled to. So Matt's gonna jump into this, and as Gary said, we'll take questions from y'all at the end. Okay.
Yeah, absolutely. And before we get rolling too, I think most people during the pandemic era, we'll call it, as Chris referred to it as, that 2020, 2021 period, um, we're familiar with something called the Paycheck Protection Program, or what is referred to as PPP. That was a very, very broad, extensive program that was put in play and helped a lot of small businesses and honestly a lot of self-employed individuals there at the end. And the company that Chris and I were part of at the time, and the company that Chris founded, Fountainhead, helped to actually get money in the hands, very similar to this program, not tax related, but it was a government funding program. Was able to get money in the hands of just over 360,000 individuals. So that is that's kind of where we got our fuel to kind of look at this program and say, look, we were able to do this effectively once for a very large audience. Could we potentially do this again for and help more people? So that's when we saw this opportunity and said, look, we got to get the word out about this. The IRS has, for lack of a better term, nearly hidden this program from view. And at times even tried to kind of put shade on the program intentionally because they didn't want to deal with it. They didn't want to deal with the what was called the sick leave and family leave credit, which lived in a bill that was much broader than that, the FFCRA bill. So at times it's received a little bit of press, but not much. And as of late, it was getting dwindling to say the least. So we're excited to shed the light back on this program and get some money back in the hands of some self-employed individuals who are honestly owed this refund from the IRS. So before we start, this is an actual tax credit in the form of a refund. So this is not a loan like PPP. PPP was a loan from the federal government that had forgiveness attached to it if you met certain criteria. This is not that. This is a refund coming from the IRS by way of the Federal Reserve or by way of the Treasury. So this is a real refund that's in the form of a check, and we'll talk about some ways to get that sooner at the very end, which is exciting. But this is a real refund, so it's exciting. So let's dig into it a little bit. So obviously, you guys know who Lendesca is. Gary introduced us. Chris and I are two of the partners there. During normal times, we're a small business lender, connecting self-employed individuals and businesses with lending opportunities for growth. But obviously, we're focused right now on this specific tax credit along with our lending capabilities. So Lendesca is a fintech, and we build technology to help people get money fast. That's kind of in short what Lendesca does. So let's talk a little bit about what this program is and how it works. If I can get my slides to change here. There we go. All right. I got to move Gary out of the way because Gary's head's right in the way of my view here. So I'm going to move him over here. There we go.
Must be the hat. I bet it's the hat.
It's the hat. Yeah. Okay. So the sick leave and family leave tax credit is basically, and we've already kind of prefaced this a little bit, is specifically for self-employed individuals who have a Schedule C, or as Chris said, a Schedule F. If you got a farm, we we have one of those on our team, so they do exist. And ultimately, if you have SE income, and honestly, there's a couple things that go into this calculation, which I'll talk about here in just a minute. But if you have SE income, you are eligible for this credit. And you could be a 1099 freelancer or have received a 1099 from a corporation. You could have, you could own your own business and be a single member LLC and have SC income. There's a number of different ways you could qualify for this, but ultimately, what you're looking for on your return, which again we can easily help with, getting your transcripts back from the IRS very quickly and scoring those for you to determine your eligibility. But if you want to look yourself, it's very simple. You can look at your current tax returns and see from 2021 is what you're looking, 2021, to see if you have self-employed income and what your Schedule C looks like. If you have income there, and when we say income, it's a little, you need profitability. Okay, so if you made 20K and you showed the government that you zeroed everything out because you took all your deductions, then unfortunately you wouldn't qualify if you don't have any SC income after all your deductions. But if you do have a profit, if you turn a profit and you have income from that profit, then you are eligible for this program. So the way the IRS does this is there is a form called Form 7202, which the IRS put in place specifically for this program, which walks you through eligibility, what makes you eligible, the impact days that you had to miss work due to COVID. Those are added up, and in short, so I don't have to go way down the rabbit hole. In short, what happens is they add up those impact days and divide divide your income by those impact days to come up with a calculation to say, okay, we're gonna, the days that were impacted are going to equal X amount per day you missed. And that's how they determine what you're eligible for. The max credit you can take on this is $32,220. So for someone that made, call it $30,000 to $50,000 in self-employed income, and you missed quite a few days caring for a child who was home from school or caring for a loved one, whether that's a dependent, caring for yourself. Maybe you were getting vaccinated and couldn't work that day, or came down with COVID yourself and couldn't work. There's a number of things that affect this that would impact your ability to work. When those days are added together and you've made 30 to 50,000 in income, though that 32,000 mark gets hit pretty quick. So the number of days obviously impact, the credit you're going to get, and the amount of income you have impacts that credit. So we'll talk about how we've made it easy to calculate that here in a minute, and Gary's going to share a link with you later that will make it easy for you to do that. But in essence, that's kind of the short of how that's calculated. So they're looking at total days impacted, and then how that affected based on your total income. Gary, you had a question?
Yeah, there was one person that RSVP'd and had a question related to this. Does a two-member LLC qualify?
It depends. In some cases, depending on that entity, um, it could be considered a disregarded entity, depending on, like, for instance, if that's a couple and that couple is a two-member LLC, I believe, and Chris might know better than I, but I believe if that is a joint LLC with a married couple, that is also considered a disregarded entity, which would default to a self-employment
Yeah,
from a
I
tax.
believe that's correct, but we'll have to check into it for sure. But I believe
Yeah,
that's correct. If it's a married couple that are the 50/50 owners or whatever the percentage is of the LLC, then I think they will qualify.
Okay,
yeah,
sounds good. Excellent. Let's keep going.
yeah. And
By the way,
we can dig into that,
we
but
should say real quick, we are not tax experts. Now, we sort of feel like tax experts about this particular credit, but even
Mhm.
something like that, we occasionally will get stumped on. And frankly, our Lendesca application, we're going to talk a little bit about that. We've created a pretty phenomenal user experience, with code throughout everything, and it accounts for probably 99.9% of every scenario. But there we go. We just found a 0.1% scenario that we'll have to double check on. So well
yeah,
done.
we can definitely double check on that. It's a great question.
Okay, well,
Yeah,
we'll follow up
exactly.
afterwards. Yep. And
Absolutely.
yeah.
Yep.
Yeah, as a single member LLC in
Does
most
qualify.
cases,
Yeah.
there are some
Yep.
outliers, but in most cases, a single member LLC is considered a disregarded entity, which would allow them to qualify. And in some cases, also, we're pretty sure that if that joint role is married, and they're sharing any of that business ownership, that's also considered a disregarded entity. But again, we'll check into that and see if we can get a better answer for you there, Gary, on the two-member LLC.
Sounds good. Okay. What's
All right.
next?
So, all right. So that's kind of the gist of the program and how the qualification might work. Now, once you get into your impact days, they the IRS is looking for a few things. Okay, they're looking for what affected you during those days, how you were affected, and there's some specifics into what specifically affected you. Now, obviously, as an Amazon seller, this is going to be a little interesting, right? You're going to have to really dig a little bit and think, how did this affect me? Because obviously, most of our situations we see are people out in the workplace or out Uber drivers, right? Or somebody that's interacting in the market on any given day. So if you were an Amazon seller and you were in front of your computer and you were too sick to work, or that day you weren't able to market like you should have, or weren't able to answer customers like you typically do because you were picking up a child. Like, you'll have to really think through that, how that affected you. And Gary, I'm sure you can come up with all kinds of ways you were affected during COVID, right? So that might be great to share with the audience. But
Yeah, I
so
mean, I think pretty much everybody was stuck at home. You got COVID, and maybe your family member got COVID, or obviously for all
Right.
parents like myself, obviously we, are I mean, my child was a baby at the time, but for like, other parents, if your kids are at home, you got to take care of your kids at the same time, right? So I think pretty much anyone in those categories were affected. And then I believe even outside of Amazon, and I think Stephanie had mentioned to me like if you were an Uber driver or if you're like a gig worker as well, I mean, there's ways that you could potentially qualify for this. I mean, beyond
Oh,
being
absolutely.
right.
Absolutely. Yeah. Yeah. I mean, Uber was in essence shut down, right? So a lot of gig workers are getting decent size refunds from this because they were unable to drive, right? I mean, Uber
Hmm.
was shut down there for a while completely. Entertainment venues were shut down. There was a lot going on. So
Yeah.
um,
Well, what we see
start,
a lot of we see a lot of real estate agents and brokers that obviously
yeah.
couldn't go into their normal activity. But the thing that you just mentioned a second ago, Gary, about children, I mean, that's one of the critical pieces that would qualify someone is if they were taking care of a child whose school had closed or had gone remote. That's
Yes.
a very clear instance of what would qualify for this credit. Yeah.
Yeah. Yep.
Absolutely.
And some of the things on the screen are some of the things that you can think about. So, were you forced to quarantine at any time due to sickness? Were you taking care of a child? A lot of schools were shut down at some point in a lot of different states, so that affected your a lot of people's ability to work because you had to take care of your child. So your vaccination appointments, side effects due to vaccination. A lot of people went down after they got vaccinated. So for a couple of days, and obviously, the obvious would be, did you have COVID and were unable to work? So there's a lot in here, and it's not just childcare. There's also some dependents, or excuse me, some non-dependent care as well. So there's care for you, there's care for others, and then there's care
Right.
for dependents, which are three different categories. And so our application will walk you through those categories, and every single step of the way, they're gonna show you, okay, this is what you're gonna look for. These are the dates you're gonna pick. It's very straightforward, very easy to do to check that eligibility. So um, while it sounds complicated here, the actual application is actually pretty straightforward. So and we'll get there a little bit later. So again, just going back through some of the people that qualify, as Chris and Gary were alluding to, you've got, uh, contractors, handymans, electricians, plumbers, realtors, property developers, Uber
Consultants.
drivers. I
Yep.
mean, the list is extensive.
Yep.
Barbers, makeup artists, estheticians, hairstylists, personal trainers. A lot of I mean, gyms were shut down across the country, and CrossFit and personal trainers were out of business. So, yeah, there's a lot of eligibility here. So it's not, and I'm sure the people on this call also have some friends that fall into this category that
you
may
know,
not
you
be
know. And
sellers.
I
So
know a lot of sellers, they may have like a primary business or like, like photography. I know people that are doing that. I know some people that are running like salons, right, that were shut down during COVID. So I think, and I mean, gig workers, some people are like, doing gigs on the side. So definitely, I mean, really look at this, guys, because I don't want you guys to miss out. And it says, according to this slide, 44 million people estimated can qualify.
That's right. That's right.
yeah,
Yeah. And it even, I mean, I'll just point out some interesting ones. If you did any freelance work at all and got a 1099, you may be eligible depending on how much self-employed earnings you have. If you have Airbnbs and rent them out, guess
Mm,
what? Airbnb pays people on a 1099 basis, for instance. So there's
yeah.
just, it's so many different categories. It would take us hours to go through everything, but the bottom line is what you just said, Gary, which is we estimate about 44 million people back in 2021 actually were considered self-employed individuals who may in fact qualify for this tax credit.
yeah, and you may be looking at that number thinking, well, that's a crazy number, right? Well, you have to remember being a W-2 worker doesn't disqualify you from having self-employed income on your
Right.
taxes. So you could have a W-2 job and have a side hustle that's bringing in, 10, 15, 20 grand a year easily or more.
Yeah.
And you're still qualified for this. So W-2 income does not disqualify you from this program. So that's why that number is so high is because there's so many workers out there that have, side hustles that are falling into that 44 million number.
Yep.
So yeah, I would encourage you to take a screenshot of this, and if there's anyone in your network that might have been affected by this, you will be the hero
Yeah.
when you tell them this.
They'll
So
have to buy they'll have to buy you dinner and drinks for sure. Yeah.
yeah, right, right,
100%.
yeah.
100%. Yeah.
So let's talk a little bit about the application process itself. So obviously, when you go to the app, and I might even pull up the application here shortly to show you what that looks like. But um, there's on the app, you're going to have basic eligibility, which we're going to ask some qualifying information. We're going to check your dates to make sure we're going to ask about some of your income. We're going to check your impacted days, and then we're going to determine, okay, are you eligible to move forward? Once we get that basic eligibility, then we're going to move into how did this really impact you? Gather those days, okay, gather those full days and estimate how much credit you're going to actually be eligible for. And that's obviously the exciting part. That's what everybody wants to know, right? Is can you tell me how much I'm going to get back? And that's typically the question people want to get to quickly. So the second phase of the app is going to be that. The third phase of the app, we obviously are partnered with a bank. Chris is president of Community Bank Shares, which is the holding company for Community Bank and Trust, which is the bank we've partnered with on getting this advance in your hands sooner, which is an exciting thing we're going to talk about in here in just a minute. But in order to make this as safeguarded as possible against fraud and making sure you are who you say you are, we run through a series of identity checks using our KYC provider, which is ID.me, which is if you've done anything with the U.S. government or the IRS in the past, you're probably familiar with ID.me. So they are a partner of ours as well. So we run identity verification through ID.me, verify your identity, and then you're going to move into what we call our tax transcript pool. At that point, we've partnered with a company called Chart to actually pull your transcripts, and we can actually get your transcripts back from the IRS instantly. So, and that comes via what's called JSON data to us. So that transcript comes back. We score that transcript in our system to let us know if you are truly eligible. So up to this point, obviously you've told us, hey, this is what I think my income is. This is how many days I was impacted from COVID, and we can estimate your credit. Once we get your transcripts back and review those transcripts in our system, we can tell you exactly what you're eligible for based on those transcripts. So there's no doubt once we get those transcripts. So we pull those, and then once we score that, you're going to run through a couple more things on the back end. We might have a couple more questions about your dependents if you had those. If we see those on your transcripts, we might have questions about your business if we recognize there was a business on the transcript. And then we move from there into what we call product selection. So you have two options for this credit. The exciting option, and what most people are interested in, is if you'd like to pay Lendesca for its services for processing this for you, that's totally fine. You can move forward with a fee for Lendesca to process this, and we'll process it, and the IRS will send you your tax refund as soon as it's filed. Typically, that takes somewhere in the 16 to 20 week range. Okay. We've seen them come back sooner than that, but going into tax
We've
season,
also,
yeah.
and we've also seen it take a lot longer than that too.
Yes, we
Yeah,
have.
that's the
And going into
uncertainty.
tax season, we're probably
Yeah,
going to see that 16 to 20 be
yeah,
the average for sure.
right.
Uh, but there's another product that we're excited about, and this is something that's unique to Lendesca uh, for this program. I should say unique to the bank for this program. Um, and that is we have what's called a refund advance loan or an advance funding program. So on that product, we can actually, once we pulled your transcript, scored everything, reviewed, prepared your returns for filing, you can actually choose the advanced products and say, hey, look, I'd prefer to get my money in 3 to 5 days after signing as opposed to 16 to 20 weeks. And in that case, you can actually move forward and receive your money within 3 to 5 days of signing your return. We mail that to the IRS and you get the money up front. Once the IRS processes that return, that check is remitted via the bank. That bank gets that check back on your behalf. That loan is paid off, and the bank lets you know that's paid off, and you received your money early. There's really no headache from you in terms of applying for that option. It's fairly straightforward and pretty easy. And it's we're seeing most I would say most I say 90+% of the people that come through the program at this point are choosing that advance option. And there's no money out of your pocket up front to do that. So obviously, with a lot of self-employed individuals, myself included, I've been in your shoes. Um, I like to use my cash personally to increase my business or increase my income in some way. I don't like paying for services. I don't like paying taxes. None of us do, right? So at that point, obviously, advance funding for a lot of self-employed individuals is key because that keeps the money in your pocket, keeps the money flowing, and you don't have to pay anything out of pocket for that service fee. The bank is paying that fee on your behalf out of the check coming back from the IRS. So that's a very exciting option. So that's basically kind of the short of the process. And I'm moving through this pretty quick, Gary, because I know we're going to have a lot of questions, but
Yeah.
some of the Lendesca differentiators, obviously, Lendesca's application, us being a fintech, like we've built processes in the past for loan applications and financial institutions. So our process and application are seamless. So you could complete the entire application potentially in one visit, right, to our site. You would have to stop right at the point of transcripts. So once we pull your transcripts, that'll be your first stopping point. As soon as those transcripts are reviewed, then we're going to be able to move forward again. So in essence, you could go all the way through transcript review and final credit amount, seeing your final credit amount shortly after in one visit to the application. So we're pretty proud of that. Our team has worked really hard on making sure that we've made this process as smooth and easy as possible, which the IRS is not known for, as most of you know. So we're pretty proud of the application. So obviously, we also, have been leading the pack in terms of this program from an understanding of the program, from architecting the program with the bank, seeing some of these credits come through and understanding how they're going to be processed, what's happening on the back end. We're very proud of our team for moving forward. A little bit of time to understand the depths of the program when no one else was willing to do that. So it took a lot of effort to dig into the details of the 7202 and what the IRS is requiring for this. Um, I get flack for this sometimes, but I don't think it's a coincidence that the 7202 form that the IRS put out for this is complicated and very complex. I think that's intentional, unfortunately. So what we've done is take those complexities and all the complicated aspects of it and dialed that in for you to answer a few questions for us and be able to file that on your behalf. So, and then of course, our in-house technology, we have OCR technology, we have automated scoring technology that allows you to move through that process quicker. So, some of our technology can do the work for you as opposed to, having to wait on a CPA to sit on a desk at a CPA somewhere until they get to it. Um, our communication process is also very, very, very good. So you'll know exactly what's happening every step of the way via email and text.
I just want to emphasize something there, Matt. I mean, this is, as Matt is alluding to, this is not normally an easy process if you're a US taxpayer. And in fact, we've only met one person whose accountant told them about this program. And I can promise you, we have surveyed probably close to 1,000 people up to this point, asked them this very question. And so to me, if you really want some light reading before bed and you want to go down this rabbit hole and read, try to figure out how to fill out the 7202 form on your own, go for it. I think you're going to find that's not the best use of your time. What Matt's basically saying is we've become experts in this and we've simplified the process from start to finish so that you don't have to go do that. And we've just made the process pretty much seamless from start to finish. And that's what we're so proud of. And that's what we're trying to get this message out to people so they can also see how simple this is to get some of the money that they're owed by the government.
Yeah, if I can just weigh in, and if I'm understanding this correctly,
Mhm.
the long and the short of this for Amazon and e-commerce sellers, guys, if you do qualify, if you do have a 1099 single person LLC, etc., as Matt explained, you can do this yourself. The
Yeah, you can.
7202 is a tax form. It's long and complex, and as everyone knows, it may not be the most efficient use of your time. And in the Amazon selling world, there's a similar business analogy or business model in what we call the Amazon reimbursements phase. So everyone knows that's an Amazon seller. There's tools out there, there's service providers like Gatita, like Carbon 6, etc., where they can get you back money owed to you by Amazon. If they're overcharging you on shipping, on storage, etc., right? You can do that yourself. You can open up those cases manually, but sometimes you might miss something slips through the cracks, etc. And Gatita or the reimbursements company in that case, they can get the money back for you. They only get paid, like they take a cut of the money that they get back for you, right? But if they don't get any money back for you, then you don't have to pay them. Is my understanding correct, Matt and Chris? Like in terms of this model, is that how it works? If Lendesca can get a tax credit back for the seller, then I believe there's a 20% service fee, etc. Right? And if they cannot, then there's no money paid. Is that correct?
Yeah, in essence, that's the way it works, Gary. So
Yeah.
what we're going to do is we're going to check your eligibility. We're going to pull your transcripts. We're going to review those transcripts. If we determine that you're ineligible, we're just going to let you know you're ineligible. You don't owe us anything, right?
Exactly.
If we determine you're eligible, we're going to move you forward and say, okay, this is what you're eligible for. How
Right.
would you like to move forward, right? And then they
Perfect.
can either choose to pay us up front or they can choose to choose the advanced loan product, which gives them their
Right.
money fairly quickly.
Yeah. So if you
So yeah,
wanted to get your
it's
money
just a
back
fee.
faster, like 3 to 5 days, if I understand properly, then there's a way you can do that as well. Right.
Right.
So,
Correct.
Right.
okay.
Correct. Yeah. And so yeah, in
Excellent.
essence, we're incentivized to make sure that one, we're doing this properly, because if we don't do it properly, none of us get paid, you or
Right.
us.
Yeah.
Two, to make sure that obviously, we're getting you the max credit we can possibly get you, because you're going to get paid more, and in essence, because of that, our fee is going to be a little bit more as well. So,
Yeah.
I think there's mutual incentives there, obviously, for us to make sure that we're taking care of everyone that comes through the process.
Excellent. Okay. let's keep going, guys. I know there's a couple questions in the chat. I just want to make sure we have enough time at the end to cover them.
Yeah, and I think honestly, Gary, I think it's probably a good time to switch to those questions. I think that is
Yeah.
really the essence of the program, right?
Okay.
So we obviously we can talk through how to apply, but I think that's pretty
Yeah.
straightforward, Gary. I think you're going to
Thank you.
provide
Yeah.
that information in the chat.
Yeah. So, how do I apply? So I want to share a link to Lendesca first for you guys to check out, and you can find out right now if you do qualify for the sick leave and family leave tax credit. So you can check out the link in the chat. And then they have an application form to check your eligibility. And just to be totally transparent, I am an affiliate of Lendesca. So if you do go through them and if you do successfully get your tax credit, number one, congratulations. Number two, they will take a service fee. And number three, they will share with me a commission just for rewarding me for the referral. And then that helps keep us, providing these type of content for free. And it buys me some coffee. I definitely need my coffee to keep going strong, guys. So I much appreciate that. And if you're not cool with that, totally just go to their website or you can do it yourself as well. But my goal, my mission is to help you guys make sure, you guys succeed in your business. And I think this is one of the levers you can pull. Okay.
Yeah,
Now's
most
the
definitely.
time for Q&A. If anyone else has questions, please feel free to drop them in the chat right now. There's a couple of previous questions. So Patel asked earlier, hello, am I qualified if I'm employed with a W-2 with X company and I'm an Amazon seller as part-time?
Yeah, and I think we touched on this a little bit earlier. So yes, absolutely. If you are a W-2 employee, then and you have SE income or self-employed income on your tax returns in the form of Schedule C, then yes, you are eligible. There is one caveat to that. If your employer has already taken advantage of the sick leave and family leave credit on your behalf, which is in some cases, it's rare cases, but in some cases, the employer might have applied on your behalf. So there's two different forms of this credit. And if they took it on your behalf, then unfortunately you are not eligible. But what we're finding is that's a very small audience because most employers didn't know about this opportunity either. So it was a very savvy employer if they did that. And we'll know
Mm,
that. We'll know that as soon as you apply. We'll be able to see that on your transcripts and let you know that.
okay. And the next question is from Janice. Is this for the year 2020 or 2021?
So it is technically for the year 2020 and 2021, Janice. We are currently, though, only in the 2021 tax year. There is a 3-year statute of limitation on this program. And so currently we are only looking at 2021, not 2020.
Okay.
Short answer. Chris, anything you want to add to that?
Well, when this program first came out, the tax year 2020 was also a year that you can be considered for this, but we've already gone past that, and so that's why we're just looking at your 2021 return at this point. Yeah.
Yeah.
Can you remind everyone when is the deadline again?
So the deadline for the program is April 18th of this year. So we're
Okay.
approaching the deadlines. And that's why Chris said it's shocking up to this point that this program has gone flown under the radar for so long,
Yeah.
and was not more widely spread. And I think coming out of the pandemic with PPP and a couple other programs, people assumed that there was nothing else there, right?
Yeah.
And this is kind of flew under the radar, and this
Yeah.
is it's there. So yeah, you have until April 18th to take advantage of the program.
Okay.
To submit for this. Yeah,
To
exactly.
submit, correct. Yeah, to submit. So
To submit.
as long as
Okay.
it's dated, as long as our documents are dated April 18th out the door, you're good to go.
Yep. Yep.
Okay. Janice had a follow-up. Would this be filing an amended return for that year?
That is correct. Yes. So we're taking so we take when we pull your transcripts and tax transcripts for those of you that may or may not know is just a record of account that we receive on your behalf as a tax preparer and Lendesca is a certified tax preparer that we receive on your behalf. Uh, So what we're doing is looking at your 2021 1040 and your transcripts to determine were you eligible? Were there liabilities that could potentially make you ineligible? In other words, did you owe taxes or do you owe taxes that might affect that return? And then we are actually amending your 2021 tax return and adding this credit in. Now, we're not amending anything on your tax return other than this credit. We're just adding the 7202 to this return, letting the IRS know that this is an amended return with the 7202 attached. So nothing on your taxes changes for that year. It's just adding the 7202 in the tax credit. But it is an amendment, yes.
Perfect. There's a comment from Rakwaza. I got anaphylaxis, then GBS from the COVID vax in 2021. I run a brand based on Shopify mainly. I never filed my 2021 tax return 1040 because I was bedridden from the spring of 21 until 2022. So my online store was on low maintenance and I had to scale back from 2020 momentum. This program sounds too good to be true.
Yeah, and we get that a lot. We get a lot that the program sounds too good to be true. Now, I will say, Raquaza, that if you did not file your taxes for 2021, then unfortunately you are not eligible for the program. So there does have to be a 2021 tax filing on file with the IRS, or else obviously we can't, we
Mm,
can't amend anything. We can't send the
yeah.
7202 with anything. So you would have to file your 2021 taxes in order to be eligible for this.
Yeah.
Can he
And as
still
far
do
as
it?
the program,
There's still time. I mean, potentially, it depends. Being that old in terms of like, that being
Yeah.
that far back, e-filing is sometimes difficult, and you can only e-file 3 years back. So it's going to
Hmm.
be it depending on you know, uh, when he files.
Yeah.
But there's a possibility. There's a possibility it could be processed and filed before the deadline. Yes.
Okay.
well, there's also, given how little time we have left in this program, the other issue is we only take the data directly from the IRS via the tax transcripts. And
Yeah.
unfortunately, if you're filing a 2021 return now, the likelihood that it will actually be in the IRS's system in sufficient enough time to give us the tax transcript is a pretty low
Mm,
possibility. So I don't, I think there's probably a very low chance that you'd actually be qualified at this point if you didn't already file your 2021 by now. So, but to get to the other part, which is the program sounds too good to be true. Um, you know, I honestly, when Matt and I first talked about this, we thought that too.
yeah.
And then we went down this rabbit hole, and we have talked to people who formerly worked at the IRS. We've talked to people that formerly worked or currently work at Treasury. We've read all the information. All the information's out there. You can, if you Googled IRS Form 7202, it's going to come up, and you're going to see it, and then, you can read the instructions and how to do it. This is absolutely a legit program. We're a little disappointed. And Matt, some of his cynicism comes from the fact that the former IRS commissioner issued a press release back in, I think it was July or August. And
July.
basically it said, the program, the self-employed tax credit, the SCTC, isn't a real program. The problem is if you read a couple paragraphs down, he didn't like the nickname. And that's why Matt's cynicism about, they really didn't want people to do this program. I mean, I hate to be cynical, but I think he's probably right. What it said as you go a couple paragraphs down in that press release is, well, actually, there is a sick leave and family leave tax credit that's only for self-employed individuals. So I always laugh about that and go, well, gee, people use nicknames for things pretty regularly. I didn't
Yeah.
say go open your web browser. I said if you Google, you know, the sick leave and family leave tax credit. It's one of these weird things. We call as a U.S. taxpayer, if you have children, there's the child tax credit, right? That is actually the official name. It's not known as the nickname of, hey, if you procreate, you get tax benefits. That would be the nickname. Okay.
Right.
It's the same
Right.
thing applies here, which is it is called the sick leave and family leave. It's otherwise known as SETC, self-employed tax credit, but it is very much a real program. And hey, if you don't believe us, try it out. And when you get the money in your bank account, you can thank us later.
Yeah.
Yeah, and I think, I spoke with someone actually on the phone the other day that had their own doubts. And I reminded them, I said, look, we have gone through extensive, and when I say extensive, I mean extensive due diligence from a chartered FDIC bank that
Right.
has verified the legitimacy of this program and is willing to give you money based on the legitimacy of this program.
Right.
So if an FDIC charter bank has done their research with very, very expensive lawyers and very expensive team and said, yes, this is legitimate, then I think we're good. So that's and obviously that was enough to convince them on the phone.
Right.
But yeah,
So
it's a
typically, just so people understand, what can they expect? I mean, with the clients that you're getting their tax credits back, I mean, I know it's going to be case by case, but like, what are we talking about typically?
Yeah, our average credit currently is sitting at about $7,200. So it's about $7,200 is what our
Hmm.
average credit is. Now, with real estate agents and real estate brokers, we're seeing more on the 17 to $18,000 credit. We have seen a couple credits come through at 27,000, 32,000. It really depends on the income level and the amount of days that were impacted. So,
Okay.
so the formula is pretty complicated to determine, what that credit's going to be. The higher your income,
Mhm.
obviously, the higher the credit.
Yeah.
But if you have a lower income, but we're impacted, the max amount of days, then you have a chance of getting a pretty high credit as well.
Excellent. All right.
And
I mean,
and we're seeing
7,200, that's not bad, right? I mean, who doesn't want that?
Yeah,
Yeah, sure. I mean,
good amount.
it's
Yeah.
it's basically found money. So
Yeah.
I think the question behind your question though, Gary, was, how long is it taking? I
Yeah.
mean, we're seeing some refunds come back in, 8 weeks or so, 10 weeks
Mhm.
on average. We're seeing others that are coming back 16 to 20 weeks or longer.
Mhm.
Oftentimes, if you have some tax liability, that is going to be offset against this tax credit, oftentimes the IRS will take a lot longer to get you
Mhm.
those funds. So hence why we created the refund anticipation loan, the advance loan, which a lot of you, I'm sure, on this webinar have heard of that before. If you file your taxes through like an H&R Block or Jackson Hewitt or something like that, they offer those programs for just for people who are filing their personal tax return. And that doesn't impact this, but I'm just saying it's becoming more and more common as people have less and less confidence of the government actually operating in an efficient fashion, but they need the funds, and so that's what we've done here at the bank is we've actually provided you a mechanism to get the money much quicker.
Okay, excellent. So in the chat, Rakwaza says, okay, thank you so much. It's still amazing. I'm sending the link and info to people in my circle. Thank you for that. And I'm glad that you're back up on your feet, Rakwaza. You can join us.
Yeah, definitely.
Really appreciate that. And Joy had a question to Matt. I have W-2 income from my business, and the income goes to Schedule D, not Schedule C income. Am I still eligible?
Yeah, so I actually probably saw me typing while Gary was
Hmm.
talking there. I just messaged our CPA, our senior accountant to answer your question, Joy. We've had this discussion before. It's been a while, but I do not believe it is eligible. Schedule D is eligible for this. But I did message her to verify that. But I do
Okay.
not believe it's because that is, I believe, capital gains and losses is Schedule D. So I think that is not considered self-employed income. I think that's in a different category. But she should get back with me before the end of our conversation. I'll have a definite answer for you.
Okay. If people want to follow up and connect, if they have some questions, what's the best way to connect with Matt and
Yeah,
Chris?
so once they hit once you hit the app, so the link that Gary provided above, once you hit that app, there's a chat feature down at the bottom right. Our customer support team is pretty active, and I've actually gotten messages from multiple customer support members while I'm on this call. They're very active and very knowledgeable. So if you have questions, reach out, go to the app, click that chat, reach out, and they should be able to answer most of those questions. If they can't, they'll escalate it to one of our management team that will probably end up getting on a call with you if they can't answer via chat. But yeah, we have a great customer support team that can answer majority of those questions for you.
All right. Perfect. Any other questions, guys, before we close out? I do feel that this is, I mean, just don't leave money on the table. If you were affected by COVID, if you do qualify, definitely take advantage of this program. I feel Lendesca is a great way that you can, get the money back that you rightfully deserve, and they can fast track it for you. And, they only take a service fee if they do get money back for you guys. So,
Yeah. No charge up front if you're not
yeah,
eligible. It's obviously we're only taking a fee if we can get you, the money that we see that you're owed. So
yeah. So, I mean, it doesn't hurt to check, right? So,
Yep.
excellent. All right. I'm all about the 80/20 rule as you guys know. So, Chris and Matt, if we distill everything down, everything we covered today, what would be like the number one 80/20 rule recommendation for the people joining us today? Chris, why don't you start first and then Matt?
No, I would say it doesn't hurt to take 5 minutes to jump on the app and see if you qualify. That's to me that's the ought to be the biggest takeaway here. You may be owed money from the U.S. government. You won't know unless you go check it out on the app. And if you are, then we'll take you down the path to get your funds for you.
Excellent. Matt?
yeah, well, I wish I would have went first because Chris took the words right out of my mouth. But yeah, I think that this program is Chris and I, if I could distill it down, with Chris and I being heavily involved in PPP and seeing so many people skepticism early on. And then later on in the program, us trying to help so many people late in the program because they waited so long. And we literally could not help the people that we wanted to help because they started stacking up at the end of the program. And if we would have had a couple extra months to do PPP, we would have went well over a half a million PPP individuals that we were able to help with that Paycheck Protection Program. And again, most of those individuals are self-employed or smallest of small businesses. A lot of the list that you saw that we showed earlier. So I think I would encourage you the same way Chris did that it doesn't hurt to try to check out. It takes 5 minutes to get through the app to determine if you're eligible. Once you've determined you're eligible and you are getting money back, that's found money is what we call it. In other words, that's money you didn't think you had that showed up on your doorstep. And so why not, right? And then obviously we want to try to help as many people as we can. And the longer we wait and the more traction this program gets, the harder it is for us as we get closer to April 8th, the harder it's going to be to push everyone through. So I think now's the time to get in there and apply.
Awesome. Perfect. I mean, from my perspective, I mean, as small business entrepreneurs, I mean, a lot of times we're just doing so much, myself included. We miss things. So I hope you guys can take advantage of this program, get the money back that you do deserve if you qualify. It sounds like the IRS, they're not doing a great job letting people know. So hopefully we can spread the word and you can get your money back. So don't leave money on the table, guys. So thank you so
Absolutely.
much, Chris, for joining us today. Thank you so much, Matt, for giving
Appreciate
us all of the lowdown. Thank you, everybody, for joining. Check out the link at Lendesca to find out if you qualify. And if you do get some money back, let us know. We always like to hear testimonials and success stories, guys. So really appreciate
Absolutely.
it. All right. Take care, everybody. We'll see you guys at the next session. Bye, everyone.
All right. Thanks so much,
Thanks.
Gary.